Hi, it's Lee and welcome to the Tesla Economist. Tesla is by far the most recession-proof auto company, just like how Aramco is the most oil price-proof oil company. In other words, Aramco can get oil out of the ground at a lower cost than anyone else. So even if oil is down to about $20 a barrel, I believe they can still make a profit, whereas others cannot. Some even need prices to be in excess of $80 or so a barrel, particularly for shale oil over crude. Don't quote me on those prices, they're just meant to be indicative. The point is Aramco can remain profitable, whilst other oil companies may not during times of low oil prices. As a result, Aramco gets a higher PE ratio due to this reduced risk, and the fact it can remain profitable through so many scenarios. They have pricing power. Does that remind you of another company? We can delve into Tesla's intrinsic value that I've discussed before, how they can currently produce EVs for a low cost at around $30,000 for a vehicle that has minimal running costs. Then, on top of that, subsidies offered by various governments. Tesla can even offer lower cost insurance to go with it, and throw in other incentives like supercharging. Or Tesla could even offer FSD, or perhaps 1-year FSD trial. They have a lot more options to offer than any other car manufacturer. And now Elon can even promote said incentives with advertising through Twitter if necessary. Of course, Tesla isn't set up only to make low-cost rear-wheel drive Model 3s. There are also Model Ys, which may cost as little as $35,000 to produce. But if Tesla is willing to do predatory price cutting if necessary, and not backing down on production, but willing to adjust to any new price the market accepts in order to sell their vehicles, then the competition is in serious trouble. A BMW 3 Series starts at $41,000 in the US, and if you have a Tesla Model 3 at just $30,000, a car coming standard with a lot more features than a BMW 3 Series, this is a huge price discrepancy, attracting a much larger pool of buyers. Of course, on top of that, the cost saving of fuel, and if in the US, the further $7,500 tax credit. Now, I don't think Tesla will need to get close to these price points. We hope things don't get that bad. But Tesla does have this pricing power that we have been talking about the whole time. We've been saying this for so long, which is why we are not worried about Tesla going through a recession. Although when we said these things, we perhaps expected the stock price to only drop perhaps somewhere in the $200 range, not $100, which does certainly sting a lot more. Oh, and potentially hoped that the 4680s might have ramped by then. The thing is, we don't have to worry about it going to zero. Well, nowhere near as much as legacy autos or the Chinese EVs. Yes, if the global auto market becomes this bad and Tesla need to run the company at break even, the demand for the Chinese EVs is also down, and they were making massive losses even in the good times, meaning things will be bad for them too. If Tesla is undercutting everyone in price with a massively superior vehicle, then all competition are in trouble. Except Tesla can only take so much market share, as they're still supply constrained. How constrained, we don't know. We are told 50% growth a year, but Tesla already at that rate now just about, and we've been told to see volume production for the new factories potentially next quarter, and then the Cybertruck on top of that. A vehicle that should still have a lot of demand even in a recession. So according to Elon, he's expecting closer to 70% growth next year if the new factory ramping goes well, which would be more like 2.5 million vehicles. In the recession, the global auto market could drop to something like 50 million next year. So Tesla would still only have about 5% global share, although if the US sales are down to about 10 million sales a year, then by the time the Cybertruck is at volume production, supposedly next year, Tesla could be at 15% market share for the US auto market. And if Tesla were at their break-even price point, and we had 50 million vehicle sales a year, I would say the median price of the car would still be around the cheapest Tesla could get a Model 3, implying 50% of these buyers could afford a Tesla. And if we factor in the cost savings of fuel, then possibly the majority would be able to afford a Tesla. And as for the US, then with the tax credit, Tesla would probably be well below the median car price. So there'd be ample demand. In other words, Tesla could not meet demand if the entire auto market dropped 40% and Tesla were selling vehicles at their break-even price. If demand drops more than that, and things are actually worse than the 2009 global financial crisis, then who knows what will happen. of course, costs would naturally come down for Tesla as well. If the scenario is that Tesla are going full zero gross profit here, not net, Tesla's annual OPEX would probably get down to around $6 billion, a loss they can afford to maintain for perhaps a couple of years, selling at zero gross profit. I say these things not as if they are likely, but merely to point out how strong a position Tesla is in. I would however hope that they're still able to hit margins of around 20 to 25%. And they may be so profitable they could end up buying Ford or someone for pennies on the dollar. Sure, I know investors don't want that sort of move, but imagine owning all those cell factories Ford are building and the car factories, along with other resources. I know we love having brand new Tesla factories as they're so cool, but these factories are already built, and Tesla still managed to get a factory that's decades old in California to the highest output from any other car factory in the US. This might be another reason as to why not to do a buyback. Just a possibility that Tesla may do horizontal integration, but there may be other distressed assets suitable for vertical integration for Tesla to purchase too. Either way, in a recession, there could be a lot of bargains come up. And if you not only have cash, but actual cash flow, then you are the winner. The correct analogy for what we might see might be Forrest Gump and his Bubba shrimp boat, being the last boat standing to take all the shrimp. This is likely going to be tough, and like I've said for some time, be sure that you can get through a recession so that you are not forced to sell shares at the worst time when you don't want to. I even told you that I'd put away enough money for 3 years' mortgage payments, although I didn't listen to myself and couldn't resist even cutting into some of that too, buying on the dips. Oops. My point is that despite Tesla is getting crucified right now, more than most of the other auto stocks, it's not like a regular auto stock, and there is no reason for it to share a similar PE ratio as them. For one, it still has tons more growth left. Two, it can get through recessions without bailouts, although all vehicles it makes are also eligible for credits, and even do acquisitions. Three, energy could be bigger than autos. And four, the cars are also self-driving robots. Next, I'm going to try and do some financials based on various price cuts, margins, and ASPs. I think, or at least hope, it's unlikely that Tesla will end up having to sell at break-even or losses. The economy would have to be in a dire situation for that to occur, and legacy even worse, which would mean the Fed would pivot, or maybe Biden would get rid of Powell. I believe he has a letter of resignation he can use if things get too out of control. It just depends how much longer they want to put the squeeze on the economy to make sure we don't see inflation. Elon even saying that he is seeing deflation, and the Fed is using out-of-date data to make their decisions. Of course, it is too in Elon's self-interest to say this. Perhaps the Fed are just being extra cautious, but it's potentially more dangerous going too far and leaving us in a deflationary economy or even stagflation. I think the reserve banks have likely crushed the chance of hyperinflation. Meanwhile, Tesla do seem very busy everywhere and getting things done. They're not going to let a year with less profit affect their growth or mission. Anyway, this was Elon talking about worst case scenarios, which are never easy to hear. He has been in some really bad scenarios in the past and doesn't want to repeat. He's battening down the hatches to do what he can to mitigate pain. Or who knows, perhaps Elon just loves Sun Tzu and just appearing weak when he is strong. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.